What's up, traders? I hope you all had a wonderful weekend. So, let's start this week off with our commodity analysis. I'm going to start with nat gas and I'm going to go through gold and crude oil today. So, let's see what's happening here with nat gas. Okay, right here we have the target hit using the aggressive entry. Let me quickly show you what I've said in my last video so that we can take it from there. 6.993, or you can mark your buffer zone. If you follow me from a couple of months, you know this is the way I mark my buffer zone right here. So this is the buffer zone here on Rwanda. 6.990 goes up to 7.116. If you have a pullback in between this zone, to enter in a less aggressive way, I would wait for the entry pattern, which is one of the engulfing pattern, red engulfing pattern, a bearish pattern, or to enter in an aggressive way, the entry will be the 50% retracement. With that, you can expect one ATR target. Right here, this was a 50% retracement. So as you can see, the target has been hit using one ATR. Now, if you're still managing your position, 1618 retracement is the place where I want to exit my trade. Now, at this point, what to expect from here? Now, as you know, this is the overbought situation. With that, we have this engulfing pattern. This is just a pullback we are getting here. That doesn't mean we are bullish at this point. Now we can still get a retest of this zone here above, which is 7.282 goes down to 7.049. This is the zone, or we can also possibly retest 20 EMA, and then we can expect a trend continuation. So this is the zone right here again. It can retest the lowest level of this zone, which is 7.049, before we get a push down, or we can get two green candles, then a red candle that will become our pullback entry before we see another push down. So I'm still not entering any buy trades until we hit the zone here, which I've just mentioned in my last video, or we are broken above 20 EMA at this point. So not entering buy until these two conditions happened. So keep an eye here, just a pullback, and we can see a push up with maybe two green candles, then red candle, and then we might see a sell signal again. The market is in a downtrend. I will look for the price to hit my counter trading zone, take buy trades. So wait for the conditions. Net gas is still in the downtrend. As you can see, it's moving down in the trend right here, and we might see a hit of the counter trading zone before we see another push up. So I will only enter with an entry condition, either a sell entry here or buy entry here. Right here, similar situation for Rwanda. We had a perfect target hit here on this platform. As you can see, right after the fifth hit of 50% retracement, we had a push down, hit 161 retracement, and target has been hit after that. Now I have not entered this trade because I've entered the trade above right here, this one. So if my take profit is hit just recently, I normally wait for a less aggressive way to enter, which I did not see yet, which will be an engulfing pattern right here. So that is why I did not enter this trade using an aggressive entry, but that is our take profit hit if you would have entered using the aggressive entry, and 1618 retracement has been hit here on Rwanda. Now, similar conditions, not buying until we hit the counter trading zone right here, or we are broken above 20 EMA. This is just a pullback. We might see few more green candles hit 20 EMA and then engulfing candle. Once we have that, that would be a good sell signal to take your short trade. That would be a good signal of a pullback entry as well. And also, this is the minor zone. If we have this condition here, there is a likely chance that the market will continue its trend downwards. Again, not buying until we hit this zone, or we are completely broken above 20 EMA. Let's check gold. Okay, looks like we did not get any sort of reason to enter gold here. As you can see, market push down. Yes, we did get a bounce here, and now it's breaking below this bottom as well. So looking at that, the next support for gold is right here. This is the next support, which is 1572, goes up to 1590. Now at this point, what to expect? As we are now broken below this major zone will now turn into resistance like this. So I would wait for this candle to close. Once we have a close of this candle, you can use our Fibonacci tool, same like we did for nat gas. Pull up your Fib tool, and your sell limit order will be right here, which is a 50% retracement, 1633, and you can use 180 up for your targets if we have a push up and then push down. But you need to wait for this candle to close completely to see a pullback and then to take your short trades. Gold is still bearish, not buying until we are completely above 20 EMA or above this zone above, which is 1644. Once we are broken above, then only then I will look for my buying trades. At this point, I can see a sell condition. If you want to end an aggressive way, that is your aggressive entry using a limit order. Let's check crude oil. Okay, right here. As mentioned in my last video, I've said that we can expect a little bounce before market will push down again, and that is exactly what happened. It hit our $1 target right here, and then it's pushing down. It is now still in the support area, which is till 75.20. Now we might see two red candles, then a green candle that can form here a condition something like this. If that happens, I will go long again. So only sell if we are completely broken below this last level of resistance, which is 75.90. So at this point, I will look for my buying trade. I'm not expecting any sort of reversal, but we can expect some good bounce that will be enough to hit our take profit. So that's all for commodities here. If you have any questions, buzz me on Instagram. I'll get back to you ASAP. Hope you trade green this week. I'll see you guys in the next video. Till then, take care.